Hello everyone, my name is Zeph and welcome to the Star Network podcast. Today we have with us a special guest, Lexi Novitske, who's the general partner at Norrsken22. Hi Lexi, it's good to have you on the show.
Hey, thanks for having me.
Great, I'm excited. As you know, the topic today is VC trends. The VC conversation is always a hot topic. People want to know about it and hear about the great work that Norrsken22 is doing. Can you share more about Norrsken? I mean, I know it's a tech-enabled fund that supports African startups that are relevant and scalable, but could you share more about the business?
Yeah, so Norrsken22, our current fund is a $205 million fund. So we're one of the larger funds investing in just Africa tech. We're investing for commercial returns, so actually not investing for impact, which a lot of the other funds are doing. And something that sets us apart is we're also backed by over 35 founders of billion-dollar plus tech companies themselves. So founders that have built scalable businesses across industries, they're now not only investing in our fund, but supporting our founders and helping them with their own scale-up journeys. We also have a couple of African founders in that as well. So GB at Flutterwave, for example, as well as the founder of HopStop, which sold to Apple. So it's great to have those entrepreneurs really behind us. And they're incentivized not only to make returns on their money, but also to look into the continent and learn a little bit more and maybe potentially even acquire some of the companies we invest in.
Amazing. And I think what I love about Norrsken from when I was doing my research is exactly what you said. It's a fund that is backed by entrepreneurs, like tech entrepreneurs. So when you're going out there and you're looking for businesses that are relevant, you guys have that industry knowledge. It's that you've built years, and even with yourself, with your own portfolio, you started equity ventures.
Exactly, yeah.
Exactly. So you've also invested yourself as an individual. You have your own fund, and then you're part of this general group. I think that's great. But when we talk about VC, I feel the conversation is it sounds like a roller coaster, particularly when you hear, VC trends in Africa, the investors are pulling out, people are heavily invested. You're very unsure on what the data is saying, right? But I think it would be key to highlight how the global landscape sort of affects investments into the continent, right? From a political perspective, from an economic perspective, I was seeing deals like, Nala has raised 40 million in Series A. This is the largest Series A deal. Rainest has also raised money, and these are part of your portfolio companies. Last year, Money Points raised $110 million USD, taking it to unicorn status. So it sounds like there is still very much interest, but what's going on within the space currently?
One of my biggest frustrations, even though our economies are so separate from what happens in the US, all of the macro trends that drive US markets eventually impact us in Africa. So what we saw with a big pullback in venture is interest rates were much higher. So capital was moving away from risky assets, investing in more conservative ones. That meant that tech valuations in the US dropped, and that eventually flowed through to Africa, even if our economies are completely detached of what's happening in the US. And then, of course, we had our own economic problems in Nigeria, which I think we can all thankfully say we've reached bottom, and now we should have a couple of really attractive years of growth ahead of us. But then at the same time, now there's concerns in the US about potentially a recession and what that could do to tech valuations. So that will again overflow into Africa. So yeah, we can't get a break. But despite all of this, I think what we really see is the fundamentals are absolutely there. The companies that are reaching kind of these growth status, they're seeing the network effects. They're seeing some of the healthiest metrics you see of any companies in the world. Really attractive customer acquisition numbers, scalable growth, earning profitable figures, and generating cash. And we're still investing at valuations that are much lower than the rest of the world, even lower than other emerging markets. So still a huge opportunity. And I think if you start to see a lot of those economic headwinds lessen, maybe, this recession fears will come out and we'll be fine and everything will kind of move along. I think you'll really see that those investors, international investors, return in a big way. And that'll see a lot of growth for venture funding across the continent.
Lexi, thank you so much for that explanation. And I particularly find significant what you said about how whatever happens in the US does trickle down to emerging economies. And I guess it's just the way that the world is built. But you're correct that, our economic environments are completely different. Our political landscape is completely different. So when investors are coming in, those decisions should ideally be independent. But I like that you sort of mentioned that there is still like confidence, there is still interest, and so startups should literally continue to put themselves out there essentially, right? But when I look at VCs and when I hear stories of like, oh, this is where the money is flowing, it's largely around fintech. And don't get me wrong, yes, fintech is still very important for like our economy. Like financial services is something that drives the Nigerian economy at large, but it does make me think, are there relevant businesses that are being ignored? You hear fintech, you hear health tech, again, very important, very relevant. But what happens to the likes of like agri-tech? What happens to like e-commerce? But for me, I would say agri-tech. I'm interested in agriculture. I'm still learning about the space. But agri-tech, because you need food, right, to survive. Why isn't the money going to businesses that are thinking of ways to support farmers in a way that is technology enabled and help them bypass all the challenges, right? What's going on? Why is there money just flowing to fintech businesses or logistics businesses and no one is thinking about the others?
So I think that there's two ways to look at it. One is the market size and the opportunity. And I think you can't argue that it's big, right? In agri-tech and health tech and edutech, there's a huge demand and obviously a lot of problems that can be solved by technology. But there's also an aspect of like willingness to pay and ultimately who buys these companies. I mean, their return potential could be very interesting if you're, kind of a solo founder team. You don't take venture money, but as soon as you take venture money, you need to be realizing some exceptional growth. And if you don't realize that growth, investors will just kind of, ignore you, walk away, and you'll be a fully diluted founder without a lot of runway towards the future. So understanding how fast you can actually grow some of those business models in these local environments, I think is really key. And a lot of them are very good businesses without venture funding. Now, there's certain models that I think Africa has a specific advantage. And this kind of comes into like integrating Africa into the global world. This is a global environment. And the things that Africa has as an advantage right now is a massive population and lots of talent and natural resources. I mean, some of that is agriculture related, some of it is minerals related. So looking at how you can kind of implement those two systems into a global landscape, I think there could be some very interesting investable opportunities there. I mean, we've seen a lot of talent hubs try to take that lower cost talent, train them for development skills, but maybe you could also use them to train AI data and have that really become localized hubs for that in certain areas. I think it only really becomes venture or large venture investable once you start showing that you have the scale and the unit economics that come from that. But yeah, there's certain opportunities that we're watching here. We just haven't seen the actual numbers flow through in some of the companies yet, but we're hoping that it's right around the corner.
Yeah, and thank you so much for that. And I like what you said about leveraging, like, what are the facts, right? Like you said, Africa has the youngest population. So how can VCs or even business leaders think about leveraging on that? I like what you said about training talent. Talent development is such a huge thing. How do you prevent people from, falling into the trap of the brain drain, but staying within your local context to deliver value, even internationally, while you're still here and getting the money to flow back into our country, right? But how would you say that these non-fintech startups should position to be visible? And this also takes me to an added question of what makes a startup attractive? Like, from where you sit, you've done many reviews, you've looked at valuations. What are those components that make a startup business attractive? People would usually say, oh, the team is very important. Oh, you must 100% have a CTO in your founding members pack because they want to see that that person is heavily invested from the get-go. You must have high valuations, all these different metrics. But from where you sit, how should those non-fintech companies position? And what makes a startup eligible for funding?
It's hard to answer direct because every sector is different. Every subsector within those sectors are different, but maybe overlying. So you mentioned team, of course, hugely important. Unfortunately, you can't, if you're a founder, you may have not had the experience at Google before. So you have to plug some of those gaps in within your founding team. Having the product that is not just a repeat of everything else that is already out there, but doing something that's different and doing it well and showing that your customers really love the product. And addressable market. So how big is your actual market size? Is it, like we mentioned, the ability of people to pay in education? Like maybe your market size is actually quite small, even though the demand for the product could be massive, because maybe people can only spend $1 a month on the product. So understanding those components. And then I'll go back to, I think, what we always look at. I mean, these are kind of things that you can iterate around your business model. But what we want to see is, as you're dealing with your customers, that you're seeing those recurring customers come back and they're profitable on a per customer basis. So the cost to acquire those customers, you understand, hopefully it's not very expensive. Even with enterprise customers, if you're not doing any digital marketing, there's always a cost associated with that. And how fast are you actually earning that break even back? And what is the lifetime value of these customers? So are you generating profitable returns from each one of your customers, and are you able to show that over time?
Incredible. Thank you, Lexi. I think this is very useful for people who are looking to raise money, because when you see these success stories, it's very easy to be sitting and saying, where are the VCs, right? Some people don't even know about like Norrsken or like YC. They have no idea where to begin. But I think these different like variables you've listed out will be very helpful for people. I particularly like what you said about there might be demand for a product because people like the idea of it, but is it even affordable for the mass market? If people can't use your product and it's just an idea, then you don't have a product. And I think that's something for people to consider. I was speaking to a friend about this, about why people start businesses. And I find that sometimes it's usually from a place of passion or like self-interest. But you are correct in saying that, has that thorough research been done to assess whether there's like a product market fit? Is it needed? Is it affordable? Is it scalable? These are the things that people should be looking at. And although we did touch on Africa as a continent and how there is opportunity, I still want to ask you, why Africa, right? Because when I went on the Norrsken website, I saw, you're in Ghana, you're in Nigeria, you're in Kenya, and you're in South Africa. So what is this craze? The obviously, our population, our numbers, right? The projection. I think they said we're going to be like the third largest in 2050, right? Why Africa?
Yeah. Well, I think the easiest answer is even more simple than that. I mean, we can spit out economic stats all day long. Every other market in the world has adopted technology and built massive companies from it. Africa is a huge population with a lot of problems to solve, a lot of fragmentation. Why would this not happen on the African continent? And yeah, we might be a little bit slower than LATAM. We might be a little slower than Southeast Asia, but we've already seen the beginning pieces of that come to fruition, and we're just in the beginning stages. There'll be 10 money points. There will be a lot of big success stories out of this market, and we're just at the beginning stages. And they won't all be fintech. I mean, we're seeing kind of the first wave of those fintech companies because fintech is needed for a lot of things to actually come online. You need to be able to pay for a digital product. You need to be able, as a consumer, to be able to save and invest your money and transact. As a business, you need to have those tools internally to be able to run your business more efficiently. And a lot of that is financial services related. But as those things are built, you'll be able to unlock even more digital products, and you'll see a lot more of those non-fintech related companies that also really realize $100 million revenue numbers. So I think it's a no-brainer, absolutely, for a lot of the reasons that we touched on. And as a lot of these global markets start to realize their own stagnation, maybe not the most attractive customer growth, those companies will be looking for their market to expand into. And Africa is the clear winner in that story.
Beyond addressing why Africa, what you said about why fintech is very paramount, I like that you sort of broke it down. You said as more financial services products are being enabled in our market, so whether it's like people need to pay seamlessly, we don't want to have transaction glitches, or people need to be able to do remittance in a way that is very effective and cost effective for them at that. It's like the more that this thing becomes very widespread, there is then an opportunity to build on top of that product. And I never thought about it from that perspective. I guess people just look, is it just fintech? But regardless whether we like it or not, when you look at the greatest economies in the world, fintech, they're so tech enabled, right? The financial systems are very robust. Payments are easy. Like people go into the supermarket, they tap in with their phone. Apple Pay is seamless. We today are still, in fact, I won't say like we're struggling, because I actually want to appreciate our banking system and our fintech system
absolutely.
as a whole.
One of the best in the continent.
One of the best,
actually.
exactly correct. So I think we're doing really well, but how can we even accelerate that further? That trickles down into the informal economy, and you have the likes of OPay that is already capturing that market, etc. But how do you become even more scalable to untapped rural areas? And then on top of that, people will then begin to build ideas, because your financial service, it works and it's seamless, right? But in your investment journey, what have you found to be the most challenging thing so far?
I'll talk about one thing that I think that was challenging in the early days, because I've been in Nigeria for about 12 years. I've been here a long time. Very early in the tech days, there was a huge trust barrier in people accepting digital solutions. I think we're beyond that now. I think people will try a lot of things. I think there's still maybe, lack of trust around some crypto solutions, maybe some stablecoin solutions. But right now, people are doing their digital payments on MoneyPoint, their core bank. They're using OPay. I mean, they're definitely have adopted their mobile phone to be able to do a lot of things. And I think just that in itself speaks a lot. Now, my personal journey, I think what I have struggled with, and I think probably all investors do, but I am American. I moved to Nigeria. I had my own biases about how consumers should behave, how markets should respond. And it's totally different. Taking what I knew of a very developed market system, trying to put that lens on the Nigeria tech ecosystem, I got a lot of things wrong. I mean, and I've deeply embedded myself here for a long time, and I think I've learned a lot. But those biases still absolutely crop up. And sometimes they crop up also from mistakes I made on previous investments that at the time the market wasn't ready for, but now maybe today they are, but I still have that bias. So I think challenging my own preconceptions is something that I constantly have to do. A lot of investors will talk about investing based on their gut. It's really hard to do that and do it right, because everybody has their own background that'll shade their entire view of the market. And, we don't know everything. You have to learn, and you have to be very curious and understanding what you don't know yet. But yeah, also willing to take a bet on something that you do have a conviction when you've reached the end of the journey.
What you said about you have to really be embedded in terms of the local context, like you said, is so different. So a consumer behavior in the US or in England is 100% completely different from a consumer behavior in Nigeria, based on what happens in our economy, based on even what we see as trending, based on what we see as relevant. It's yes, there are universal interests that we can all align on, but economically, financially, like our thought process is so different, right? And I like that you said that, because I think some people may feel like, oh, investors are coming in, but do they really understand the market? And I love to hear your journey. Just you saying you've been here for 12 years. It's like Lexi is committed and Lexi is passionate to learn and actually support these businesses. And when I hear similar stories, I'm like, yeah, they get it. They actually understand. So that's incredible to hear. But someone who is listening to this podcast and is like, wow, I want to go into VC. I love what Lexi is saying. It sounds really interesting. I hear VC. I don't know where to begin, right? And when I read your profile, you have a track record. You worked in Verod, you've done asset management, and now you're at Norrsken, you have your own fund. Someone is interested. They don't know where to begin. And, they may have that capital, whether from like an inheritance or even getting people to build a syndicate. What steps should they be taking to get into the VC space?
Yeah, I mean, look, there's different roles across the spectrum. So on early stage investing, a lot of things that matter, like network and community, they also matter at the growth stages, but maybe at the growth stages more your financial modeling skills and your analytic capacity matters a little bit more. So first, building those skills in the network. I'll share a little bit journey of how I got started, because frankly, I didn't know what I was doing either. And you kind of learn as you go. So I started a career here in Nigeria in private equity, but I started looking at deals just as an angel investor with my own money. And eventually convinced another investor to back me with a little bit more capital to do my first fund. But I first made those mistakes with my own money, and they can be small. Putting a syndicate together with friends and family is a really good way to do it. But kind of building that muscle on what to ask for and what to learn. And also, I would say, going through these questions of actually verifying what the market size is, testing the product, like where are the exits going to come in? Those are really hard questions to answer, especially at the early stages, but they're hugely important for even getting a follow-on investor at the later stage. There's also lots of good programs. 500 Startups does an online venture program, I believe. There's a couple of other ones out there that can kind of give you the introduction to venture capital investing, and also some great books to read. What we value in our team members when they come on board is real strong critical thinking skills, what could go wrong and why, but also being able to take kind of these very soft ideas of product and market and, the costs of engaging with customers and putting that into a 5-year financial model of what our return profile could actually look like.
On top of that, Lexi, how would you say like your cultural learnings have helped shape the way that you think? And I mean, you've pretty much touched on it, like when you moved here, taking into consideration local context, but American by birth, went to university in Hawaii, now living in Nigeria. It's like, it's completely different cultures. How has that essentially shaped the way that you think about businesses and even make decisions?
It's different also across the continent, right? Like Nigerian culture and Kenyan culture are very different as well. So it's even important to realize those nuances as you're scaling a business from one market to another. It's definitely played a role in making us try to do a little bit more of like the sense checking, speaking to consumers and users and really understanding what they see within the product. I'll say a big one. So I think that there's a big white space still in kind of B2B products. So B2B payments, software tools, all of that. But in Nigeria, a lot of these very traditional enterprise customers are super slow to adopt digital solutions because they don't trust to integrate them into their ERP solutions. They don't think they're reliable enough to, if they go down, they don't want any of their business disrupted. So they'll just continue to do things a manual way. And as a US user, you're like, that's crazy. I mean, you can obviously scale your business way faster if you embed digital tools, but going back to this trust barrier is a huge problem to overcome. And a lot of times the best way to do that is really through word of mouth, getting a few of these core customers and education, exactly. So I think that's a big part of it. Another big part of it, frankly, is the other way around, like educating international investors of not only the opportunity here and like the real case for exits. Africa is not a place to be afraid of, right? Like yeah, okay, we have some problems of corruption and fraud, but so does every other place in the world. And there are incredible, very ethical founders and incredible talent building very big businesses here. So educating international investors on that, I think, is also equally as important.
I like the education like two ways, because sometimes it's usually just founder comes in and they think they understand the market and they don't. But I like what you said about just the trust factor. Like trust is such a huge thing. Like even just being more practical, you would find that even in the average Nigerian families, the kids are doing their mobile banking, but the parents still going to the banks traditionally. I will not call names with family members that I know that do that. But, to me, when I hear it, is absurd, right? Or sometimes having a family member say, I'm going to the bank. Me as a millennial who is very tech enabled and supportive to me is like, why? Like, why would you do that? Like, you can just go on your phone, or if there's a transaction error, to me, the first step is just send an email. Whereas to them, it's I still want to go into the bank. And the other day, someone was saying in conversation how Nigerian parents, after a certain age, it doesn't matter what technology comes out for them. they are still going to apply the traditional means of, nope, I don't even trust to put my money here. What if it disappears? And you do hear stories like that. I, again, will not call names, where someone put in money into a bank and the next thing the money disappeared. So what do you expect? Like, people are still concerned. Another one that I'm learning about is even like an insurance. So how, like in England, you need to insure your car, right? That's like very basic fundamentals. But in Nigeria, the insurance sector is still building that trust. People almost still cannot understand why they need to insure their cars. And I'm learning that even when they insure it, they reduce the value of what the car is actually worth because they don't want to be able to pay for the money. So it's just getting that like education out there and like awareness. I'm not really sure how it's going to be scalable, but I think education is so critical and people don't understand it. Like, this is, I feel like the responsibilities like the VCs and even the businesses themselves that are selling product, don't just sell a product, but like find a way to educate in a way that is sort of like going to be received across board. So yes, English is our official language, but how can you even educate in like other ethnic languages like your Hausa, your Yoruba, your Igbo? Like, I feel like businesses should be thinking that broad and that wide to be able to reach scale. So I like that you said just the education aspect is very critical. But moving back to Norrsken, can you share with us any exciting projects? Like in the beginning, I mentioned 2 of your case studies, Nala and Rhinest. So is there anything exciting that's in the pipeline that you can share with us?
So, we did have our first unicorn out of the portfolio this year, a neobank called Time Bank. We do have a couple of new ones coming through the pipeline, both in the payments space. And every founder out there, please don't go start another payments company necessarily. But 2 companies that have done something very special in 2 separate markets in Africa, one in Nigeria and one in South Africa. So we'll be quite excited to announce those. We are probably about half through our fund deployment now. So we'll start thinking about the next fund and what that'll look like next year.
If there's something you could change in your career experience, what would it be and why? Is there like a day where you felt like this was a wrong decision in my career experience? What can you share about that?
I think that there's 2, and both companies will know this very well. The first was I passed on MoneyPoint quite early at my previous fund, not at Norrsken22. And this goes back to bias. I'd seen a lot of kind of these agency banking models try to work in Nigeria, but hadn't done it very well because of the bank penetration within Nigeria. But what I think I failed to see, part of it is talent for sure. But the second part was how seamless they had built their product to be able to really perform on networks where nothing else did. Down network, they would still make the payment go through. But also COVID absolutely helped rapid adoption there. So that's one that I think they've done an incredible job, and I'm sad to say we didn't ever invest. The second is an Egyptian company that's done a pretty incredible job in the brokerage and investment space. Really spectacular team, and I think they'll do very, very good things.
And I'm sure if MoneyPoints listens to this, they're like, we told you. But anyway, it also goes back to what you said, right, about how some VC investors, they look at something and it's like gut, like, how do you trust the process? But even just listening to you, I would have probably done the same thing, or I feel like maybe 9 out of 10 people would have done the same thing based on what is the track record? Does it work? Are people responding to this? But then it just takes that one company to like set a difference. So it goes back to looking at the market, yes, but also like having like a gut instinct that there's something here that nobody else sees. And although historically it doesn't seem to work, there's just something here. Then I think people will also like learn from that. Just to round up, what is your favorite quote and why, if you have one?
Oh my goodness. Look, I don't know if this is a quote, but it's certainly something that I live by, is like, don't ever be afraid of taking risk. Obviously, think about it and take calculated risk. But I think as in human nature, we like to always follow the path that is familiar, that we've seen done before. But that's never actually how, especially as an investor, that you return the fund, how you really make strong returns. You have to be really willing to step out on a limb and go with conviction, even if the rest of the market doesn't think the same way as you. So yeah, I think that's also why I'm here in Nigeria and will continue to be.
I know. And I also need to add, I like you said, don't be afraid of taking risk. Lexi is a kite surfer, like an avid kite surfer. So you guys check out her page. It just shows your resilience. And I agree with you that taking risk does actually get you far, as opposed to just being stagnant. It's like you don't know until you try. Lexi, honestly, it's been great having you. Like, thank you for sharing your story. And to the audience that has listened, you've learned about Norrsken22, you've learned about VC trends, you've learned about resources in terms of how to get started. If you'd like to know more about Lexi and what Norrsken is doing, you can follow their social media handles at, what's your handle?
Lexi Novitske on Instagram. You can also find me on LinkedIn, pretty easy.
So that's it for now. Until next time. Bye.